What's up, Wildcatters? Welcome back to another episode of the Oil and Gas Startups Podcast. Today's a little different. We're talking about vapes, eco vapes. Just kidding. This has nothing to do with vapes. Jason, we just saw you. We just saw you at Namoga. Namoga was nice enough to have us out there. We spoke on kind of the future of the oil and gas industry and how the digital Wildcatter community is kind of leading the way.
Yeah, we saw your booth there. Jake's like, "Oh, hey, that's just coming on the podcast."
Yep, no, it's good to see you guys there. It's funny you mentioned vapes. We've definitely had some vapes sent to our office before, thinking that we're in the biz, and we certainly are not in that biz.
But you know what's funny is every once in a while I get people reaching out on email wanting they're cat bloggers. And they're like, "Hey, can we write about cats on your website?"
Growth,
and I'm like,
Colin.
"That's not what Wildcatters is."
We should just put random cat vlogs out.
We should do that just as like it's like a little shtick. Like, here's our cat blog. But anyways, man, let's talk about EcoVapors a little bit and what you guys do. And we were talking a little bit about your prior history before we were on the podcast, and we had some interesting overlap in our previous career. So we'll dive into that too. But tell us what EcoVapors is real quick.
Yeah, no. So EcoVapor, we exist all around trying to eliminate natural gas flaring and venting. And so we exist in this problem statement of let's eliminate waste. A lot of people talk about energy transition. I've heard you talk about energy addition instead of energy transition.
Yeah.
So for us, it's really about, look, there's a lot of wasted oil and gas out there. There's a lot of areas for improvement in our industry.
Yeah.
And so particularly where we play a role is that if you look at the emissions problem in our industry, a lot of it stems from the production process. And a big chunk of that, stems from waste emissions, what we'd call venting, flaring, fugitive emissions.
Mm-hmm.
And so that's exactly where we play. So we have solutions that can help capture all this tank vapor, treat it, purify it so it's pipeline ready, so you can sell the gas instead of flare the gas. So it's pretty simple value proposition.
Yeah. I talked about that when we were at Namoga, that my favorite area right now of energy tech is in sustainability in oil and gas. And a big part of that is methane mitigation and detection and recovery. And so this, obviously fits in that bucket. So interested to dive into that. Let's talk about your background. You got an interesting background. You told me about when you were at the fund and you heard that, I worked at Venture and the fund started in Venture. So we know some of the same people. Yeah. So tell, was there something before the fund? Tell us about your background.
Yeah, no, that's right. So I started my career at Shell, fresh out of Boulder. So I went to University of Colorado, came straight to Shell out of there. And so I have a finance background, but so I quickly, after a few years at Shell, was in corporate finance, and then I transitioned into the Shell Technology Ventures group. And I was part of the team that created that. We spun out a fund of Shell Technology Ventures and created a fund with secondary investors, and it was called Kinda Capital. We're the sponsors, or we're the general partner of that fund. And so we managed a whole range of energy technology startups, some that were created out of Shell, like in Venture. But then in addition, lots of other third-party investments that we made in a bunch of companies that you've probably heard of along the way that are now within some of the larger OFS space, large cap names. So we built a lot of companies that you want
to drop any names?
So some of the companies that came from that fund. InVenture one of them. Well Dynamics was another one that's now inside of Halliburton.
Yep.
Geodynamics was one of our investments, one of them that I was involved with.
I mean, so let's talk about, point of time.
David Wesson, right?
Yeah. Let's get a point of reference here for time, because InVenture's 22 years old now. And so, this fund, I'm sure InVenture, that fund kind of coincided timing around then, right?
Yeah, absolutely. So Shell Technology Ventures started around then. The fund we created out of that, or that Shell created out of that, was around 2007 timeframe is when it went live. So I joined in 2006, and the first thing I did was go start working on the creation of this fund with under the managing partner. And so once we did that, we spun it out in 2007, and there's still some of those companies within that fund today. But Shell Ventures, of course, is back in doing the full corporate venture vehicle as it's well known today, and having a lot of great success. But Shell's been out there in this space for a long time, and that fund in particular, has had a lot of learnings, but of course as well a lot of successes as well. And InVenture continues to be a great part of that story.
Yeah, we actually, our boy Kurt Coburn from Shell Ventures was on the podcast earlier. So if you haven't listened to that episode, go check it out. Kurt's a really interesting guy and is helping lead that effort there now. But it's interesting to hear your story because I mean, you're kind of OG in the space of energy tech, right? Like you probably look at us like, oh, these guys, they talk about energy tech. We've been doing it for 20 years. You've seen kind of a full range of energy tech. And I made a comment also at Namoga the other day, like, hey, when we talk about the innovation in the industry, like when you talk about downhole, there's been the companies you mentioned, Adventure, Geodynamics, those are all downhole tool and technology companies, right? And we kind of found, hey, this is the new wave of digital technology. We got to get David Wesson on from Geodynamics.
Yeah,
I mean, what a guy over there. But yeah, when we may have podcast listeners that don't know, but I was a project manager at Adventure Global Technology, and so I ran that tool. And back when you guys started that, it was really kind of a JV between Shell and Halliburton was starting it as well, and then ended off spinning off some of it to Halliburton. They took the VersaFlex anchor hanger with them, and Venture focused on open hole and case hole liners, and probably I don't know if you can dive into that, but it sounds like a pretty bad
probably can't
decision.
Dive into anything specific there. But what
VersaFlex anchor hanger is $1 billion tool now. So Halliburton, really they cashed in on that one. Yep. But super cool technology. Yep. We're talking about it. I was like, I think it's what I loved about running that tool was that I had confidence that it was going to work. Like it was just a fucking great tool. And so I think that technologies like that are really interesting.
And what's been amazing to me seeing all of this is that, you look at these portfolios that are within a lot of the energy, whether it be corporate venture or true, fund venture capital companies that are focused on energy. There is a ton of just fantastic technology. Some that's made it and commercially done very well, and some that has not. And so you look at companies like that and some of the other companies that have been successful out of these funds. And I think the other thing that a lot of people don't realize is just how hard it is. I mean, you go from starting with a massive R&D check, and then you actually have to build a company and build inventory and build capital, and it's tough. And so those, so I've always just had a massive amount of respect for those that can actually start it, get it done, take it all the way through, and make it successful.
Yeah.
And there's a lot of people out there that claim they're entrepreneurs, and I wouldn't claim myself to be one. Even though, I've run some entrepreneurial businesses. I kind of, the standard to me is kind of like, well, when you've swiped your credit card for payroll, then, then you've really been an entrepreneur.
That's a great litmus test, a great filter for sure.
And so I've certainly not been there, but I have a huge amount of respect for all these
I really like in venture, just being internal there and just seeing how complex and think, myself, really being an entrepreneur and thinking about, if you're going to start a company like that from scratch, the R&D burden at the beginning, and then, they handle all supply chain and manufacturing, and then the commercialization of actually getting it distributed. You and I were talking, I think I could help them a ton with distribution and marketing and just all the different components that go into making a business. Even if the product is great, the commercialization of it is a whole nother beast.
Well, and then the investment side of it's tough too. If you think about the risk that you're taking. So let's say you take that first phase of just R&D, you can be $5-10 million in just in that phase. And then you take on the building risk, then you take on the commercialization risk, and you wake up pretty quick and you're 25 into one of these companies. And so being right becomes very important.
Yeah.
And so you see this transition now to much of the energy venture investment these days is digital. And I don't think that's necessarily by mistake either. I think that there's, it's much less capital intensive.
Yeah.
And of course, there's a huge opportunity. We all know how far behind our industry has been on the digital side. But there's been a real transition on where these capital flows are going, whether it be digital, whether it be energy transition, or what you'd even call oil and gas clean tech, which is kind of the as you talked about, some of the methane mitigation and everything else. There's a lot of new areas that are coming to light now that offer huge opportunities.
Yeah, a really interesting. I don't want to get too off on a side tangent of this, but a really interesting thing that I just thought about was I moderated this panel at this geothermal conference, and the panel was venture capital and geothermal. And I'm looking at geothermal, and I'm just like, man, the capital commitment that you have to develop new high heat application technology. and the timeline that's associated with that, like, are these VCs that are typically used to digital technology that are now moving in this space. I was asking questions on, like, do you guys have the patience? And you brought it up right there. All of a sudden you're 25 mil in, and you better be right. You're seeing that now, like in the geothermal space.
And it gives you an example of why it's hard. Well, so you've seen that there's been a lot of success with the corporate venturing model.
Yeah.
You see most of the majors at this point have a corporate venturing arm.
Yeah.
And I think that they have to bridge that gap a little bit, that, before you can get straight to a fund, because you're right, a true fund may not have the same level of patience.
Yeah.
But
How would you define success in a CVC? I mean, is it the same as a normal VC fund, or are you determining success based on, because a lot of them, for them and their thesis, it has to be something that's applicable for their business. That's not the case for all of them, but I would say for most of them, right? More so than actually even getting returns on these investments. So I'm curious how you think about that.
Yeah, and so they're all different, and so I don't think you can generalize. And I think that they all have their own separate mandates, but they definitely have multi-tiered objectives, right? I mean, so they all want to make money. I mean, they all want to, or at least make sure they're covering their cost of capital, or whatever it might be. So absolutely, they want to make sure they're a profitable endeavor. So that's definitely part of it. But you're right. I mean, if you look at some of these corporate venture vehicles, part of it is access to technology. They know that if there is not a steady investment in technology, our industry falls behind, and so they view themselves as one way to fill that gap. And so, in my background, some of them that I've worked with, whether it be co-investing or whether I ran a business that we had two of the different corporate venture capital vehicles into. It absolutely was a dual mandate, where if you are not applicable to the assets that we have in our portfolio, it doesn't really matter, because we're not, our shareholder mandate isn't to be a corporate venture capital fund. Our mandate is to be a better business and return to our shareholders, even through deployment of technology and developing our reserves and whatever that might be. So there's absolutely a dual mandate, and I think there has to be, for them to kind of play a little bit of an earlier stage role than some of the other funds may be willing to play.
How long were you in venture capital?
Probably about 10 years.
And was that all at Shell?
So I started at Shell, Shell and Kinda Capital, which was the, so we actually brought in additional investors. So it wasn't just Shell. But so from about 06 until, so I went into a portfolio company and kind of dual hatted for a while, but from about 06 until about 15, 16 timeframe.
So what did you do after that?
So I went into one of our portfolio companies that was called Exact, which was another downhole technology business. And so managed that for several years. And at first I had kind of a dual hat where I had to do some of our, I was still a principal in the fund, but then went into Exact, which was backed not only by our fund, but also by BP Ventures. And then so we sold that to Baker Hughes in 2018. So then in 2018, after we sold Exact into there, I went and joined Baker Hughes.
Okay. And then how'd you get onto EcoVapor? How did you go from Baker Hughes to EcoVapor?
So Baker Hughes, I was running a business called Avitas, which was really around emissions management solutions. We had drone-based methane inspection. We had continuous monitoring methane inspection, as well as some machine learning AI applications as well. And really, really clever business. And so then also was working on emissions management strategies within Baker Hughes. And so through all of that, became a little bit aware of EcoVapor. And then, after a while, after some conversations with the private equity backer of EcoVapor, moved over there and have now been there for about 4 months. So it's been fun and fast and exciting so far, and good things ahead for EcoVapor for sure.
Was there anything that was like surprising, for you going from, being the VC, investing into these companies, to switching roles into more of like that operator role, and now you're kind of reporting to the VCs? Like walk us through that a little bit.
Well, so I can walk you through a little bit, but I think the easiest way to think about it, what I always kind of reference, is that you go from being the one that could ask the smart ass questions to being the one that has to answer those questions.
Yeah.
And so it's different. There's pros and cons of both. I enjoy both. The investment side, you're always high level. You're more worried about, okay, what's the thesis? What's the market? How do we position this? Who's the ultimate buyer? What's our value proposition? Whereas you're still just equally as worried about that when you're on the operations side, but you also, more than anything, you have to make sure your team is engaged. You have to make sure you have the right people in the right places. And so there's a team element that I find much more attractive on the operator side as opposed to the investor side. But at the same time, they're both great and they both serve a very valuable purpose. And so it's just different. It's just a different.
I like you better as an operator than a VC. I don't like VCs too much, so stay an operator.
So I mean, here's the thing. Here's the defense I'll give to any VC out there, and I've seen it a lot. So founders, very, and obviously you guys are founders. A lot of times can be very skeptical of the money that's coming in, but there's very few instances where the investor can succeed at your expense or vice versa. Generally you're either going to fail together or win together.
Yeah.
And so I think if you set yourself up with that frame of mind, and if you set yourself up knowing that, look, we're on the same team, and we're either going to, pop champagne or drown our sorrows together, then I think you're in a good spot and structure it accordingly.
Yeah. I just think you made a comment about like the smart ass questions and, it drives me crazy when
I'm thinking of like 20,000 smart ass questions.
Well, here's the thing. I mean, they're super smart, right? I mean, anyone that's in private equity, venture capital, I mean, these are highly educated, very sophisticated investors.
I mean, can you make that blanket statement though?
But most of them,
I've met some pretty retarded VCs, if I'm being honest.
Look, but the point is they're used to looking at a business through a certain lens.
Yeah.
And so, and so I guess one
I'm
benefit I have is I'm used to that lens.
I'm pure operator, so I'm like, hey, if you haven't built a business, fuck you. You don't have like
if you haven't swiped your credit card for payroll. I get it.
It's like pure operator bias from me. But no, I've got plenty of friends that are in VC.
And you're absolutely right. There's definitely a difference in perspective because, and I honestly think the human element is probably the biggest difference because the investor, other than maybe dealing with the executive management team, isn't dealing with the real nitty gritty trials and tribulations that's going on with your team around you.
Yeah.
And what might be going on in their personal lives or what might be going on to why, the business truly isn't growing and there's no easy button, to
flip the switch
and sales are all of a sudden going to go crazy. And so it's difficult, but, typically, the good funds are on your side and they're there to provide a resource. But at the same time, they're there to challenge you. And so, I think the best ones will sharpen you and leave you a little bit better.
Sure. Yeah. I mean, there's good and bad relationships and everything, right? So I think we've actually beat that dead horse on the show of making sure that you take capital from the right partners because it is a partnership, right? And a relationship.
Absolutely. So you're interviewing them just like they're interviewing you when you're going through the process. So just like a job interview, it's, make sure that these are people and it's the same thing if you were joining a fund or if you're joining a team, you don't want to hire someone just like you don't want to hire into a place where, you can't get on with those people.
Yeah.
So
100%. So let's talk about, sorry for like going deep into.
We haven't had a VC on since Kirk. So
all good.
I like getting holistic view of energy tech from someone that's been in it for, 10 to 20 years and has seen a lot of things. I think that it's really valuable to us and the listeners to, kind of extract your wisdom and insight of everything that you've seen. And so let's talk about EcoVapors a little bit. Like, what do you guys actually do? Like you gave me the high level of, hey, we're focused on methane mitigation and rogue emissions, but like, what do you actually do?
No, easy. Well, first off, if I'm here to impart wisdom, we're all screwed. So just be aware of that.
Take it with a grain of salt.
Take it with a grain of salt. Exactly. But so EcoVapor, what we specifically do is, as I was kind of set up, I always like to start with the problem statement. That's why I always set it up accordingly. But when you think about a huge source of emissions from our operations, they really do stem from these production tanks, whether it be, a vent from a thief hatch, a Nardo valve, whatever it might be, all the way to the flare. And so when you hear a lot of people talk about eliminating routine flaring, they're a lot of times talking about, making sure they're properly set up with gas takeaway capacity and making sure that there's no high pressure flare going on out there. But the tank and downstream of the tank, there's a huge amount of vapors built up there that a lot of times end up straight to the flare. And there's a variety of reasons that can happen. One, it could be contaminated gas. So air comes into these tanks, whether it be through truck loading, whether it be through leaky hatches, whatever it might be. And so all of these midstream pipelines have, oxygen specifications on their lines. You can't be higher than X, 10 ppm oxygen, or else, they'll reject the gas, or they may even shut in your production, shut in your gas. And so one of the solutions we offer is the ability to capture that gas, treat it for oxygen so that you can then send it straight to the sales pipeline. We also have H2S solutions. So we have the ability to eliminate H2S from some of these gas streams. So once again, you can get it into the sales pipeline. So that gas purification, we have some real proprietary processes there. So that's one thing that's unique to us.
So are those things detected as they're going into the sales pipeline?
So generally, whether it's at the custody meter or wherever it might be, yeah, they generally have the ability to analyze what's in these gas streams.
Okay.
And so we do too.
The midstream company themselves are analyzing.
Well, if you got them, they're protecting an asset, and they're protecting everyone's asset, right?
Yeah.
Because if you've got a corroded line, then that hurts everybody.
Yeah.
So so really that's one element of what we do. That oxygen removal is an important piece of it, ensuring that we can take some of this gas that may be wasted, flared, vented, whatever it might be, and continuing to ensure that it makes its way to its sales pipeline.
Okay.
H2S removal. We also have the ability to do site assessments, the ability to come in, help you understand, what's going on in my tanks, what are the pressures, what is the contamination in my gas, all with the central theme of eliminating flaring and venting from these operations. And that's all around waste, really.
Yeah.
I mean, because it's not, there's a variety of ways to get our handle around the emissions problem, but a lot of people like to think about environmental benefit and economic benefit kind of being mutually exclusive.
Mm-hmm.
And we don't see it that way. We're proud of the fact that not only are we enabling a big step change in emissions reduction, we're also offering a huge ROI. You can imagine if you're putting 300 MCF a day back into the sales line instead of flaring it. I mean, doesn't take you but probably a handful of days to pay back the return on our investment.
Well, that's my favorite talking point on rogue emissions and methane leaks is that's product. Like these, anyone outside the industry, I try telling them that, like, hey, oil and gas companies are incentivized to contain that because it's their product. Like they need to put it in the pipeline.
Well, and when you look at an energy constrained, energy short world that everyone seems to be talking about right now, it's even more important, right?
Yeah.
So mutual benefit. Why eliminate the emission, but more importantly, capture it, do something with it, put it to beneficial use.
Yeah.
And so that's the theme of eliminating waste is really kind of core to what we do.
Yeah. So you talked about you guys have this intellectual property to remove H2S, sour gas, remove H2S from the gas. Is that a mechanical process? Is it a chemical based process?
So most of the intellectual property is on the oxygen side, but we have, so both of them though. So on the oxygen side, we have a combination of special metal catalyst and heat. Essentially is what is helping with the conversion and eliminating the oxygen. We essentially nuke the oxygen out.
Yeah.
And put it, so as the gas flows through.
Yeah.
And then on the H2S side, it's a solid media, iron oxide based media.
Yeah.
That, we have our envelope that makes sense where we're a very easy, practical solution.
Yeah.
As opposed to a lot of these chemical treatment solutions where you're sitting there on the knob, you're dialing in your trizine and everything else. So
yeah. So I mean, someone that's not familiar with that process, when we talk about whether it's a chemical process or, I mean, if you have like media filters, that'd be a mechanical process, right? Is that a mechanical process? Regardless, if you have chemicals, you're using scavengers, and you're, like you said, dialing in a knob to dump in more chemicals, and I think scavengers sometimes they have negative effects that go with them too, but also just price. Like more scavenger you're using, your price, your variable cost goes up as well. So that's cool. We had one podcast, I can't remember who it was. but we were talking about like the smell of West Texas, and especially in like some old fields, especially like you go out around like Seminole and out towards like eastern New Mexico. I mean, it just smells like old crude, and like that's what I think of. Like
yeah, well, that's probably where you're,
like,
probably thinking of sulfur.
like
Yeah.
I grew up in Midland, and it's like, man, I grew up on the smell of waking up in the morning smelling H2S and diesel. Like that's what I run off of.
There you go. I mean, yeah, breakfast of champions.
Yeah, it is, man. And but that's a result, or it's a byproduct of rogue emissions, especially when people talk about methane mitigation. Like you said, they usually think about flaring, but it's like, man, how much do we have that leaks off of tank batteries and things,
or it's just flat vented?
Yeah, because I didn't know. I didn't know, like you brought up like like the air issue, and trucks hooking up. I didn't think about that, and so that could be, that could be a huge issue across.
And there's
tank
a
batteries.
huge amount of sources of these fugitives, and it's interesting. And so now, as monitoring is getting more and more prevalent, there's a huge amount of technologies out there, whether it be satellite down to aerial, down to drone, down to guys walking around with the RGI cameras, and then even continuous monitoring devices. What is driving those this newfound transparency in emissions. And so what's going to be interesting to see over time is the reconciliation between kind of how emissions have been calculated, how they're, how you're submitting to the EPA based on calculations, based on what's on your site, versus what the actual, monitored emissions are.
Yeah.
And so, but the positive of all of that is it's driving us to take action. It's driving us to do something about it. This isn't about who's right and who's wrong. This is about action. And so where there is technology to mitigate, let's take advantage of it.
Yeah.
And so being in energy tech for a while, there's always been this one conversation, which is the risk aversion of our industry towards new technology. And, the reality is we're in a risky business by default. So you want to eliminate every other risk that you can along the way. And so, with that comes this aversion to not take on too much new challenge when it comes to technology. But, this is kind of one of those where it's like, well, I don't know that we can afford the same lack of adoption as we have. And, this isn't about getting another day or another foot of ROP or another, this is kind of about, look, we need to act, we need to make sure, because like you said, and it's also even just about making sure we're containing our product just as much as it is about, making sure that we're not emitting. I mean, but all of the above, there are technologies that exist right now that can help. And I think it's great to see the industry taking some action. But at the same time, I think one thing that everyone's, big fans of you guys for is the fact that we also need to be proponents of our industry. I mean, this is the greatest industry in the world. And, we're not here to shame it. We're here to say that we can do better.
Yeah.
We can eliminate waste.
That's why I'm so bullish and hyped up on methane mitigation and containment, because it has in my mind, it could be the biggest impact over the next 10 years for the world's climate goals. Like, hey, we're not talking about shit that we can do in 2030, 2040, 2050.
Yep.
The technology exists today to make an impact.
And those
so
barriers are getting lower and lower and lower to entry.
Yeah.
Yep.
I mean,
I think back to our Cube Technologies podcast, and he was saying, with a lot of the emissions detection, it was, it was big, it was expensive, and the threshold for detection was so high. So many little, I guess I'll just call them kind of nickel and dime little emissions kind of, stated by. But if you look at the aggregate of those, it was actually much larger than the big emissions.
Well, and the reality is there's no perfect answer. So, whether it's a satellite picking up, thousands, you're only picking up major leaks from something like a satellite. Then the aerial flyovers that some of these guys do, okay, maybe you're down to like the 100 scoff per hour type leaks, and then all the way down to drone and people on the ground. There's a solution for almost any of these different types of leak rates. And so balancing the cost versus your objective is really the name of the game. What is the balance of cost versus detection threshold that you want to deploy into your operation to make sure you're driving change is really, kind of where it is. And all of these technologies are coming down in cost. So, even the couple years where I was at Avitas, it was remarkable to see where the cost started and where the cost ended up across the industry.
Yeah.
Because, that's the thing, is there are cost-effective solutions now. So, hopefully they can see some rapid uptake, and they are. I mean, you can see it. They really are doing it.
Yeah, I had some people from Chicago and New York the other day asking me, hey, what technologies are in the space. And I'm actually I'll wait until this podcast drops because I'm gonna write like a master thread on Twitter of like, hey, here are companies in the space that are working on it. Here's links to the episodes. Give me some downloads out of this thing.
There you go.
But I think, like I ran into this engineer randomly at a swimming pool at a hotel in San Antonio while me and the wife and kids were driving back from Midland last month. And he's a lead production engineer for one of the largest private operators out in West Texas. And he said that they're putting VRUs on or vapor recovery units, right?
VRTs and VRUs, they're a little bit different.
Okay, cool. And I actually don't know the difference. If you know the difference, we should dive into that. But he was talking about, he's like, we're going not only on new pads, he's like, we're going back and retrofitting all of our old pads. He's like, not only because is it the right thing to do, he's like, but it just makes sense economically to do it as well. He's like, I'm ordering VRUs like crazy. So you see companies doing that, and it's I talk about oil and gas guys like they're the most capitalistic guys that you can meet, right? So that's how you
it doesn't get much easier than making sure you're capturing your own gas.
Yeah, exactly. I mean, it's like these guys don't want their gas flaring off into the atmosphere because it's money, it's value that they're losing out of their asset.
I'm glad you brought up VRTs and VRUs because it plays exactly into what EcoVapor does.
Okay.
So a VRU, vapor recovery unit, it's a compressor. Right?
Okay.
I mean, it's essentially capturing and moving gas into the sales pipeline. A vapor recovery tower is upstream of your production tanks. So you're producing some oil into it. You're capturing the vapor off of the top of it and, sending that to the sales line as well. So you're doing some vapor capture, but that's upstream of the tanks.
Okay.
Now fast forward. So, so we usually say you're probably capturing
before we fast forward, can we dive into the VRUs a little bit more? Because honestly, like I'm not even that familiar with them. So VRT, the tower is upstream from the tank. So it's flowing through the tank. You're capturing some vapor.
It is before the tank. So you'd be capturing before the tank.
Before the tank. Okay. VRU is
it can be after or before. It depends on how you're configured.
Okay.
Yeah, so if you're
is it one or the other, or is it
it's going through your,
or you could have both.
It's going through your separator on the tank, and then the gas is moving into the
production
VRU.
comes in, goes through the separators, so send gas away, send oil to the tanks, or send oil to the VRT. VRT also the next layer of separation.
It's a second layer.
Yep. And
okay.
So capture vapor, send it to the sales line.
Yep.
Or send the rest of the tanks. So generally that VRT may be capturing, let's say 60, 70% of your vapor volume. You're still sending all that to the tank. So you still have a vapor stream in that tank.
Yeah.
So fast forward now, if you have a VRU downstream of the tanks partnered with what EcoVapor does, you can now have 100% gas capture because, a lot of people don't necessarily want to capture that because it can be contaminated. It can have oxygen-rich gas because of, all of the issues we were talking about earlier. So now if you have a VRU downstream of those tanks and you send that gas through one of our units to take all the oxygen out, now you can have 100% gas capture on your site, send it through our unit, send it straight to the sales
so
line.
you can build out this ecosystem where you can capture 100%.
Absolutely.
Okay.
So we can, we can operate completely independently of a VRT and still enable 100% gas capture. Or if you have a VRT, not a problem. We can still operate in that.
Okay, so the build out here is it goes through the VRU and then through EcoVapor into the sales line?
Correct.
Okay,
and,
cool.
and we don't always need a VRU. I mean, we've got applications where we're just downstream of a blower.
Yeah.
But, it just depends on the pressure makeup on a given site.
Okay, cool.
But VRUs are a great tool to make sure that we're capturing all this gas.
Yeah.
And, but where we come in and really play a role is ensuring that all of that gas is pipeline ready and can all be sold.
Okay. Are VRUs, I'm just hearing about them and it may just be, my lack of exposure to them. But are they starting to gain traction? Are they getting more adoption lately? Because I'm hearing about them more often.
Yeah. I would say yes.
Okay.
I'm not a VRU expert.
Yeah.
So I'll always give you that blanket statement.
Yeah.
But I think so. You have gas capture regulation as well. So and it varies by state.
Yeah.
So like you see a place like North Dakota that has 91% gas capture. You see a place like New Mexico that is aiming for 98% gas capture. And so, there's others in between. And, so when you look at that drives action. And so you can't have full gas capture if you're not thinking about the production tanks as part of that as well.
Yeah.
And so that's driving more and more adoption of these VRUs.
Okay.
Ultimately, if you want to capture the gas, you've got to have a way to move the gas into the sales pipeline.
Yeah.
So as there is more takeaway capacity on site, and as there and you will see more and more adoption of the VRUs, which will also hopefully for EcoVapor as well be a very
Hope
good
you
thing
guys,
as well.
Yeah.
And we can continue to
piggyback off that wave. Yeah.
Yep.
Yeah.
So when like you have homes that are energy efficient, they're essentially LEED certified. Is there any sort of like equivalent to that on wells that have absolutely zero emissions that come out there? Boom, this is XYZ certified.
Super interesting question. And you see a movement going on this. I don't know how much you guys have heard about this, but there are bodies out there that are working on, well, you've probably heard about, responsibly sourced gas, is a topic that a lot of people are looking at. So there are people that want to buy responsibly sourced gas to make sure that, it is actually meeting whatever standard that is. But the certifying bodies behind that, there are some. The one that probably gets the most discussion is Project Canary.
Yeah.
Project Canary is one that's doing some monitoring, but also doing kind of a well by well certification. They call it Trust Well. MIQ, which is through RMI, is another one that's doing some of these certification processes. But
I had an attorney hit us up, a friend of mine, and it's like, hey, Digital Wildcatters needs to lead the initiative on what are the standards and qualifications. Like, because if the oil and gas industry doesn't do it, he's like, someone from outside the industry is going to do it. And that's not what you want. He's like, you guys should lead the effort.
It's a good point. And I don't know who that is, but if you
we
think
do
about
energy tech nights, podcast, memes, industry standards.
Some of the natural people, I mean, we could wake up and it could be the KPMGs of the world, right?
Yeah.
I mean, those that are very well versed in audit, but at the end of the day, what people want is a way to differentiate their production and show that they really are meeting their ESG objectives.
We had Block Apps on the show a few weeks ago, and they are a blockchain company based out of New York City. And he actually thinks that that's where one of their biggest applications in the oil and gas industry is around ESG initiatives and
their trace carbon app
and emissions, and being able to say, like, a lot of people think blockchain can be used in supply chain. Like, hey, were these, was this diamond responsibly mined and sourced? Make sure that this isn't a blood diamond. Yep. And it's kind of, you're starting to see that same thing in the gas. Hey, is this responsibly sourced gas?
Well, so I agree. And back to the theme of emissions transparency, I think that's exactly right. I mean, we're sitting here with, 3 plastic bottles of water, right? I think there's going to be a day, well, you've booked an airline ticket recently. It shows you your carbon footprint.
Yeah.
There's going to be a day where our bottle of water is going to say X tons of CO2e went into the making of this bottle of water.
Yeah.
And it all rolls downhill.
Yeah.
I mean,
I just think the airline thing's kind of like scammy to me, because now they're selling, like, you have the option to upsell to offset your carbon footprint. I'm like, fuck you.
And look, I understand where you're coming from, but the point is that where there is information, there's going to be action.
Yeah.
Where people are measuring, they're all of a sudden going to do something about it.
Yeah.
And so I think that for all of us, and this isn't just our industry, but I just think you're going to see more and more.
Yeah. Actually, I was talking to one of my, I wasn't talking to him, just more so kind of going back and forth on Twitter, because my friend Craig Lawrence, he measures his home electricity consumption for, like, I don't know, last 10 or 15 years. And he said he's noticed his electricity consumption going up pretty significantly over the last 5 to 10 years.
Yep.
And now he's looking at ways to take that down. And it actually kind of like goes with like OKRs, measure what matters. Like, you can't take action on anything if you're not measuring it, right? And once you start measuring stuff, then people start becoming cognizant of it and saying, hey, how can we actually lessen our consumption and take it down? So I think it's a good thing. Yeah. I think it's good to be aware of that stuff. And in oil and gas, it's going to be really interesting with ESG metrics and how, I did a podcast a while back with an ESG focused fund, and they very much think that ESG data is as important as financial data. And so if you're a public oil and gas company, or even if you're a private one, you're having to access institutional investors, you have to be able to measure this stuff, and it's going to become a differentiator.
Interesting.
I mean, you think like EOG is not going to be touting like, hey, we've got the lowest methane emissions out of anyone.
If we're, when you think about how companies are measured. If you're thinking about the value of a company as a finance guy, I guess at this point I've pretty well given up that valuation is even a real thing anymore, because
Yeah.
it seems like everything completely trades on emotion at this point.
Mm-hmm.
It's impossible to follow true valuation of any company at this point. And so it leads right into the point, though. People want to put their money in something they want to be involved in.
Yeah.
And ultimately, your stock price is essentially, measuring the vote of the popular money. And so, if you think about it that way in terms of, hey, we're trading at 10 times earnings, we're trading at, 50 times earnings, whatever it might be. I mean, I think one of my favorite tweets I saw recently was someone said, do people realize anymore that to be a $10 billion valuation company, you do at some point have to generate $1 billion of cash? And that's kind of out the window at this point, right?
It's really
and a lot of it is because people are voting emotionally with their money.
We can go. Let's go into this. This is something that I love investing, and I used to be. I mean, I grew up as a tried and true value investor, and guess what? Over the last 10 years, which is the majority of my investing life, I fucking lost out on a ton of money because that valuation doesn't make sense. That valuation doesn't make sense.
Yep.
But when you start looking at the market, when you start looking at multiples about, how does this multiple compare to the multiples across the market? It's in line with the valuations of all the other companies. I was just yesterday, someone was like, hey, Palantir trading at, 200x revenue. And I'm like, yeah, but if I'm looking at Palantir as being, the same tier as a Google or Amazon or Facebook over the next 15 to 20 years, do I give a shit about that 200x multiple today? Because it could still be a 200x multiple in 20 years, but much bigger.
Yep.
And so it's really interesting. And in the startup world, like, you don't use value investing in the startup world.
No.
Like you're thinking, big picture. And so that's it's really interesting that you brought that up, because I've had a CEO of a EMP reach out and it's like, hey, we really want to own content distribution and cultivate a community. And you look at the Elon Musks of the world and the Dave Portnoy's of Barstool Sports, and this is the future. It's I go back and forth with like my boy Dan Pickering, shout out to him, but like go back and forth. I'm like, this is the new world. Like, I understand that it looks like, tech bubble, but like the meme stock generation is a real thing. It's a real thing, and it's not going away. And I'm not saying like the extremes, like, GameStop and stuff, but being able to have like that following and the emotional investing, it's real. I agree.
That's why I think
Elon pumped my crypto this morning.
There you go.
Let me tell you about my sophisticated crypto strategy, all right? I just buy all these fucking random cryptos. I do zero research now. And chances are one of those is going to go to the moon and make up for the losses of all the other ones. But so far, they're all going to the moon.
Don't follow Jason. This is not
great.
This is not.
This is the guy who made a lot of money on Nikola.
This is not investment advice.
Yeah, I documented Jake's journey of investing in Nikola, and it just fucking crashed in like the 3
Have they
days.
made a car yet?
No.
Okay.
This is before all their fraud stuff.
Yeah, this is
came
before the fraud.
I was like, look at Tesla. Nikola's next, right?
But to your point, it all plays into the same thing. That like you mentioned, this all came up through talking about ESG, and I think that obviously it's important, but at the same time, I think people are realizing more and more that people are voting for their companies with their dollars.
Yep.
And so it gets you a little bit away from some of your traditional valuation metrics that people look at.
Yeah.
And so it's interesting because, I mean, similar to you, I sit here and, watch everyone else make lots of money speculatively and go, man, what am I doing? I need to do something else.
What am I doing thinking with logic and reasoning?
Yeah, exactly.
What do they teach in finance school like 10 years from now?
I think
if everything goes out the window, it's like
zero to the multiple that you multiply by.
Yeah,
it's essentially what it comes down to.
So if someone, if you have a production engineer or any other engineer that's listening to this, and they're building out these systems and processes for methane mitigation and capture, where can they find EcoVapors? What's the website? How do they reach out to you guys?
Yep. So it's www.ecovaporrs.com, which is EcoVapor. The RS is recovery systems.
Got you.
So ecovaporrs.com. And we would love to talk to you.
Awesome.
We can help you enable 100% capture and prevent that gas from going to the air and put it back in the pipe.
Awesome, man. Yeah, I'll feature you guys in that thread when I ride it. So hopefully we'll get you guys some attention there.
They'll also be at ET in Midland.
Oh, that's right.
That's right.
ETN.
October 18th.
That's right. Come see
You
us
know what?
October
Let's
18th.
make sure we pump this podcast
Yeah.
out soon so that people can
I
catch
think
them
this
there.
one goes out Monday.
Cool.
I could be wrong.
All
Maybe
right.
next
We'll make
Monday.
sure it goes
It
out.
goes
so
out
that-
before.
So Energy Tech Night in Midland, October 18th.
Yucca
and
Theater.
then in Houston the following week, October 27th, right?
Yep, 27th.
Yep. So make sure that you catch us, guys.
Yeah, the 18th in Midland.
Yep.
Yep. So cool, man. We'll run into you guys there. Appreciate you coming on the show.
Nope. Thank you. And give us a follow on LinkedIn. We put a lot of good content out there if you're interested in the topic.
There you go. Awesome.
Cool, guys. Like Colin said, go check out ETN on the website. Just go to events. You can register on there as well. We'll catch you guys at one of those events and on the next episode.